We're going to call to order the Finance and Purchasing Committee meeting for Monday, October 19th, 2020. Roll call. The time is now 7:02 p.m. Roll call, please.
Alderman Newsome,
Present.
Alderman Moiseo,
Here.
Alderman Kirkwood,
Present.
Alderman Rivera,
Present.
Alderman Seager.
Present.
Item C. Item C, approval of minutes. I'll take a motion by Alderman Moiseo, second by Alderman Kirkwood to approve the minutes as shown for September 21st, 2020. Are there any questions on this motion? Roll call, please.
Alderman Moiseo,
Aye.
Alderman Kirkwood,
Aye.
Alderman Rivera,
Aye.
Alderman Seager,
Aye.
Alderman Newsome.
Aye. Motion carried. Is there any public comment for Finance and Purchasing Committee?
Alderman Newsome, there are no public comments for your committee.
All right, thank you, Madam Clerk. New business, no old business, new business. Item A, motion to authorize the mayor to award a contract to Bowler Construction, the sole bid received after a public invitation to bid process for the purpose of making certain improvements to high service pumps at the water treatment plant in an amount not to exceed $2,197,300. This project is funded using water and sewer revenue bonds. Are there any questions to this motion? Roll call, please.
May I have a first and a second?
Oh, I'm sorry. Alderman Moiseo, second by
Aye.
second by Alderman Rivera. Sorry.
Alderman Kirkwood,
Aye.
Alderman Rivera,
Aye.
Alderman Seager,
Aye.
Alderman Moiseo,
Aye.
Alderman Newsome.
Aye, motion carried. Item B, I'll take a motion by Alderman Seager, second by Alderman Kirkwood. A motion to approve an ordinance permitting the disposal of Public Works heavy equipment. The Public Works Department seeks to trade in 4 skid steers which will pass their useful life and use the trade-in credits to procure replacement equipment. Are there any questions to this motion? Roll call, please.
Alderman Rivera,
Aye.
Alderman Seager,
Aye.
Alderman Moiseo,
Aye.
Alderman Kirkwood,
Aye.
Alderman Newsome.
Aye, motion carried. Item C, motion by Alderman Moiseo, second by Alderman Kirkwood, to authorize the mayor to award a contract to Burris Equipment via Sourcewell contract number 32119-CNH pursuant to the City Code Section 2-458, subsection I-3, Government Joint Purchasing, in order to purchase a skid steer loader for a purchase price net of trade-in not to exceed $74,251.55. This project is funded using GO bonds. Are there any questions to this motion? Roll call, please.
I'm sorry, did you give a first and a second?
Alderman Moiseo, Alderman Kirkwood, second.
Alderman Seager,
Aye.
Alderman Moiseo,
Aye.
Alderman Kirkwood,
Aye.
Alderman Rivera,
Aye.
Alderman Newsome.
Aye, motion carried. Item D, I'll take a motion motion to authorize the mayor to award a contract to Burris Equipment via Sourcewell contract number 32119-CNH pursuant to Code Section 2-458, subsection I-3, Government Purchasing, Joint Purchasing, in order to purchase a skid steer loader for a purchase price net of trade-in not to exceed $66,354.80. This project is funded using GO bonds.
Sure.
I'm gonna take a motion by Alderman Kirkwood, second by Alderman Seager. Are there any questions to this motion? Roll call, please.
Alderman Moiseo,
Aye.
Alderman Kirkwood,
Aye.
Alderman Rivera,
Aye.
Alderman Seager,
Aye.
Alderman Newsome.
Aye, motion carried. Item E, motion to authorize the mayor to award a contract for Lewis Equipment for Sourcewell contract number 32119-CNH pursuant to City Code Section 2-458, subsection I3, Government Joint Purchasing, in order to purchase a skid steer loader for a purchase price net of trade-in not to exceed $58,942.80. This project is funded using GO bonds. I'm going to take a motion by Alderman Rivera, second by Alderman Moiseo. Are there any questions to this motion? Roll call, please.
Alderman Kirkwood,
Aye.
Alderman Rivera,
Aye.
Alderman Seager,
Aye.
Alderman Moiseo. Alderman Moiseo,
Sorry. Aye. I don't know what hit that. Sorry. Aye.
Alderman Newsome.
Aye, motion carried. Item F, motion to authorize the mayor to award a contract to McDowell Mechanical via Lake County, Illinois contract number 15261 pursuant to City Code Section 2-458, subsection I3, Government Joint Purchasing for HVAC services covering May 1st, 2020 to January 4th, 2021, in an amount not to exceed $34,000. The Public Works Director requests blanket purchasing authority with McDowell Mechanical for HVAC services using the Lake County, Illinois contract expiring November 4th, 2020, with an extension to January 4th, 2021. I'm going to take a motion by Alderman Seager, second by Alderman Kirkwood. Are there any questions to this motion? Roll call, please.
Alderman Rivera,
Aye.
Alderman Seager,
Aye.
Alderman Moiseo,
Aye.
Alderman Kirkwood,
Aye.
Alderman Newsome.
Aye, motion carried. Item G, motion to authorize the mayor to award a contract to Copenhagen Construction, the lowest quote, to make necessary repairs to the retaining wall at Washington Street and Spring Street for an amount not to exceed $38,300. Going to take a motion by Alderman Moiseo, second by Alderman Seager. On August 20th, 2020, the retaining wall at Washington and Spring was damaged as a result of a motor vehicle accident. So are there any questions to this motion? Roll call, please. Did you get my motion?
Yes, ma'am.
Okay, thank you.
Alderman Seager,
Aye.
Alderman Moiseo,
Aye.
Alderman Kirkwood,
Aye.
Alderman Rivera,
Aye.
Alderman Newsome.
Aye, motion carried. Item H, motion to authorize the mayor to execute a grant agreement with Metra to reimburse the city up to $6,600 for the replacement of certain security cameras at the Waukegan train station. I'm going to take a motion by Alderman Rivera, second by Alderman Kirkwood. Are there any questions to this motion? Roll call, please.
Alderman Moiseo,
Aye.
Alderman Kirkwood,
Aye.
Alderman Rivera,
Aye.
Alderman Seager,
Aye.
Alderman Newsome.
Aye, motion carried. Item I, motion to authorize the mayor to execute a grant agreement for Illinois Terrorism Task Force grant in the amount of $4,100 to fund the training of fire department technical rescue personnel. I'm going to take a motion by Alderman Moiseo, second by Alderman Seager. The ITTF grant provides funding to train in components of specialized rescue. The grant will cover the cost of tuition. The city will fund the cost of travel, meals, and lodging. Are there any questions to this motion? Roll call, please.
Alderman Kirkwood,
Aye.
Alderman Rivera,
Aye.
Alderman Seager,
Aye.
Alderman Moiseo,
Aye.
Alderman Newsome.
Aye, motion carried. Item J, motion to approve an ordinance permitting the disposal of a fire department vehicle. I'm going to take a motion by Alderman Moiseo, second by Alderman Rivera. Are there any questions to this motion? Roll call, please.
Alderman Rivera,
Aye.
Alderman Seager,
Aye.
Alderman Moiseo,
Aye.
Alderman Kirkwood,
Aye.
Alderman Newsome.
Aye, motion carried. K has been removed from the agenda until a later date. Item L, motion to approve a resolution authorizing the lease of 8 parking spaces to the College of Lake County during the duration of construction. I'm going to take a motion by Alderman Kirkwood, second by Alderman Seager. The College of Lake County will be undertaking a large construction project in the city's downtown and wishes to utilize 8 spaces in the city-owned parking lot located on the southwestern corner of Sheridan Road and Clayton Streets during this time. The resolution is attached. Are there any questions to this motion? Roll call, please.
Alderman Seager,
Aye.
Alderman Moiseo,
Aye.
Alderman Kirkwood,
Aye.
Alderman Rivera,
Aye.
Alderman Newsome.
Aye, motion carried. Item M, motion to approve the program year 2019 Consolidated Annual Performance and Evaluation Report, the CAPER. Are there any, I'm going to take a motion by Alderman Rivera, second by Alderman Seager. In accordance with the U.S. Department of Housing and Urban Development regulations, all grantees are required to submit to HUD a Consolidated Annual Performance and Evaluation Report, the CAPER, which outlines the accomplishments and progress made toward the 5-year consolidated plan goals for the period. The attached report contains the accomplishment data for the 2019 program year beginning May 1st, 2019 through April 30th, 2020. In accordance with the city's citizen participation plan, a public hearing will be held October 19th, 2020, which is tomorrow. No, that's tonight. At 5 p.m., soliciting public comment. The document has been available for review and comments since October 5th, 2020 on the city's website. Staff is requesting approval of the year 2019 CAPER. If there's any questions, contact Larissa Garland. Are there any questions to this motion? Roll call, please.
Alderman Moiseo,
Aye.
Alderman Kirkwood,
Aye.
Alderman Rivera,
Aye.
Alderman Seager,
Aye.
Alderman Newsome.
Aye, motion carried. Now, we finished everything on the agenda except for our reports, and I will turn it over to Ms. Tina Smogelski.
All right, good evening. I'm happy to present to you the results of the city's financial audit ending April 30th, 2020. At this time, this is only a review, and there are many important facts and figures that will not be covered tonight. The final audit reports are pending release of federal guidelines regarding the auditing of certain COVID-19 related federal grants, many expenses which were incurred in the prior fiscal year. And once those are released and the external audit firm has resolved those outstanding matters, then we will be able to release the full CAFR publicly and to the City Council as well. If any of you would like to receive a draft of the CAFR, it's a very lengthy document. I can provide that on an individual basis, but it cannot be released publicly until such time the auditor has released their opinion. SICKAGE is the city's independent auditors, and Fred Lance is our partner who handles our audit. He's been our partner for about the last 3 years. I'd like to take a moment to thank the city staff as well as the SICKAGE team for all of the hours and hard work spent completing this very technical and complicated process. And this year it was 100% remotely done with our auditors. They're usually on site, so that added some complications as well. But everybody worked together as a team, and I'm proud of my team as well. Auditors work within governmental auditing standards And their job is really to provide reasonable assurance that the city's financial statements are free of material misstatement. So the audited financial statements are a product of the city. And again, the auditor's role is to opine that they are fairly presented. As I previously mentioned, the final reports have not yet been released. However, we do anticipate receiving what we call a clean opinion letter from the auditors for the fiscal year, as we have in prior years. What I'm going to cover tonight are just our basic financial statements. They're comprised of our citywide financial statements. We also have many fund financial statements on an individual fund level, notes to the financial statements, and other supplementary information that will be provided in the CAFR when it's released. But due to this evening's time constraints, I'll be focusing the presentation on the citywide financial statements, the results of the city's largest fund, which is our general fund, and a summary of the city's capital assets and long-term debt. And feel free to jump in if you have any questions as I'm going through this information. What we have here is the governmental activities. So these are our main general funds, special revenue funds, capital, debt service funds. So this is everything but for our business enterprise funds, which is water, sewer, and parking. The city's governmental activities statement of net assets is very similar to a balance sheet in the private sector. And the statement of activities is very similar to an income statement in the private sector. Our assets and deferred outflows total $287 million for the fiscal year. Liabilities and deferred inflows, $478 million, which leaves the city with a net position of negative $191 million. So if this were a balance sheet in the private sector, that would be stockholders' equity. The negative net position is a result of the governmental activities having $1.67 in liabilities for every dollar we have in assets as of April 30th, 2020. The government activity statement of activities has revenues totaling $109 million for the year and expenses totaling $129 million, resulting in a change in net position of negative $20 million. The city's governmental activity statement of activity is, again, similar to an income statement in the private sector. And the net position result is we have $1.18 in expenses for the fiscal year for every dollar we had in revenue in this particular category. So to get into a little more detail on the asset side of our statement of net position, we did have an increase of $13 million over the prior year. Our current assets, however, decreased to $111 million, mostly attributed to the decrease in cash from the 2 GO bonds that we had issued last year. Specifically, as of April 30th, 2019, the capital equipment and street replacement funds had a combined cash and investment balance of $28 million as of April 30th, compared to a combined balance of $16 million at the end of 2020's fiscal year. Restricted assets remain relatively unchanged, and our capital assets have increased as a result of the spending of these dollars on capital investment from our bonds. The city continues to hold a large parcel of land on the southwest corner of the city in Fountain Square that is available for redevelopment. And our investment in our assets were made as a direct result of our bond monies over the last 2 years. Deferred outflows increased to $66 million and account for the additional assets associated with the city's pension funds and other post-retirement benefit plans.
Question.
Yes.
Why don't we have an increase in land that we have on the books per se, when I thought we were getting rid of land? Is that, have we acquired more land, or am I misunderstanding this?
In this particular presentation, I combined our land available for resale and all of our other capital assets, infrastructure, sidewalks, all buildings. I combined that all in one. I can provide you a more detailed breakdown. The land that we own for out at Fountain Square, because the last appraisal, we haven't changed the valuation of that on our books. But land itself did not increase. This is all of our capital assets that are governmental.
Okay, we
I'm
just
trying to
haven't
fit it
bought,
on one slide.
we just didn't take in more land though, right? That like we purchased.
Correct.
Okay.
Correct. Yeah, so the increase is really from our investments that we made primarily in road resurfacing.
Okay.
And in the CAFR itself, there's a lot more detail and it breaks it out by capital asset. And in fact, when I get to, I think I included slide 13 breaks it out separately.
Okay.
Okay. Any other question on our assets? So now the liability portion of essentially our balance sheet, our total governmental activities liabilities increased $33 million from the prior fiscal year. Our current liabilities decreased because last year's payables were much higher because we had capital projects in the pipeline. We also had sales tax rebate obligations that had been incurred at the end of last fiscal year, but not paid because the state was delayed in sending us sales tax. Our non-current liabilities increased significantly, and this includes compensated absences, capital leases, environmental liabilities, pension and other post-retirement obligations, claims payables, a TIF note, and our GO bonds. The significant increase in non-current liabilities from 420 up to 426 million from the prior year's 396 is attributed to the addition of long-term bonds that were issued in 2019 and an increase in pension liabilities. The deferred inflows that you see here reflect property taxes levied as of December 2019, but not yet collectible until the 21 fiscal year. We also have some investment gains in pension funds that have not yet been recognized in the annual pension expense that also show in our deferred outflows. And I have a slide with more detail on these liability makeup. The statement of activities, which again is similar to an income statement. This is really where we talk about our revenues and expenses for all of our governmental activities combined. Our charges for services increased due to the annual increases built into our code of ordinances for licensing, including liquor and gaming. And there was also a growth in fines that were collected during the fiscal year. We did have some declines in permit revenue and franchise fees, but these were offset by the increases in our charges for services. Operating and capital grants and contributions increased due to a one-time non-recurring grant, which includes those COVID-19. And something to note here, and this is getting a little technical, but on these government-wide financial statements, we do recognize the receivable of these COVID-19 grants for expenses that were incurred in the prior fiscal year. But then in the general fund statement itself, because that's at the fund level, we won't recognize that CARES reimbursement until it's received, which was in October of this year. So you're going to see the receivable on the balance sheet for that grant, but you're not going to see the income for it at the general fund level until the current fiscal year that we're in now. So it's a little technical, but GASB likes to throw those rules in there that change things a little bit. Our general revenues include taxes and intergovernmental revenues, and the majority of this increase was due to a higher property tax levy in the current fiscal year. Other taxes which grew slightly from the prior year included sales tax, but the majority of the growth was in local use tax and utility tax for fiscal year 20. We do anticipate that COVID-19 will negatively impact these economically sensitive revenues in the 2021 current fiscal year. Intergovernmental revenues increased, driven by an increase in income taxes. Again, this is shared with the state of Illinois based on population calculations, and it did improve statewide in fiscal year 20, but we do anticipate that to be mitigated in the current fiscal year. Investment income also improved over the prior fiscal year as interest rates moved up during fiscal year 20. As we all know, they have moved back down in fiscal year 21. And miscellaneous revenues such as donations, sale of scrap metal also increased over the prior year. Our expenses, again, and this is governmental wide, public safety had a dramatic increase. as substantial increases continue in the employer costs associated with sworn police and sworn fire workers' compensation coverage, liability coverage, and employer pension benefits. Streets, bridges, and public works also grew, and this was a direct result of the capital project and infrastructure improvements that were made during the year for roadways, sidewalks, and equipment. Sanitation and environment is related to the city's participation in certain EPA mandated programs, as well as the residential refuse collection program. And these costs grew as previously vacant homes are becoming reoccupied and being added back to the garbage pickup routes, as well as the cost of fuels and other commodities to support that program. General governmental activity expense decreased due to a reduction in costs across all spending categories in this area, and in particular holding vacancies for 60 or more days in order to recoup budgetary savings when an employee is terminated. Building and zoning expenses stayed flat over the prior fiscal year, and community development expenses increased due to new economic incentive agreements which were entered into during the fiscal year, specifically the car dealer RDA that we entered into for a sales tax rebate. Interest and fiscal charges increased by 1.4 million, and that is due to the issuance of the 2018 GO bonds during the fiscal year of 2019. So now we'll look specifically at the general fund, which is our largest single fund in the governmental activities. The general fund performed better than projected, with revenues finishing $2.6 million over budget for a total of $74 million, and expenses finishing $1 million under budget for a total of $75. Once net transfers are taken into account, the general fund's deficit for the fiscal year is a negative $812,000, which is an improvement over the projection of $4.3 million in the budget. So for our general fund revenues, the total revenues finished $2.6 million over the projections, and as expected, property taxes performed close to budgetary estimates. The city budget's property taxes filed with the county and actual collections were 1% below the levied amount. Sales, home rule sales, telecommunications, hotel, motel, and food and beverage taxes were under budgetary estimates by a combined 1.2 million. But this was partially offset by the positive performance versus budget of cannabis, local use, utility, and gaming taxes exceeding their budget projections by $928,000, which brought the category to a total of $30 million, 1% under budgetary projections. The city's share of state of Illinois income tax and personal property replacement tax, as well as state or other federal grants, account for intergovernmental revenues totaling $14 million for the fiscal year. This resulted in a favorable variance to the budget of $1.8 million. Licenses and franchise fees missed budget projections, under by 3.1 million and 11% for a total of 2 million respectively. In particular, vehicle, liquor, and gaming licenses performed under budgeted projections due to the April 30th expiration date being extended into the 2021 fiscal year per mayoral order as a COVID-19 accommodation. Permits also fell off in the spring when the city would normally realize a fiscal year-end boost, again related to the COVID-19 impact. Franchise fees continue to see declines year after year as other solutions for television and entertainment present themselves into the marketplace. All of the revenue sources outperformed their budget projections, including fines and forfeitures, charges for services, miscellaneous revenue, and investment income. Fines and forfeitures finished over budget projections as the city corrected the recognition of automated traffic enforcement, or red light tickets, from being booked on a net basis to a gross basis. Similarly, ambulance fees included in the charges for services exceeded budgetary expectations due to correcting these revenues, again being recorded net of third-party collection service fees to a gross basis, which is a more appropriate way to show that and in compliance with GASB and per our auditor's recommendations. For both the automated traffic and ambulance, the third-party collection fees were recorded this year as expenditures in the public safety expense category.
Hey, Tina,
Yes.
I'm sorry. You mentioned that, can you hear me okay?
Yeah.
All right, I'm sorry. You mentioned that, that there were, decreases or I mean, the reporting was gone from net to gross?
Yes, so in prior fiscal years, when we receive our deposit from our red light ticket third-party administrator, it's net of their fees. They take their fees out before they deposit payments into our bank account.
Okay,
And that's how it was being recorded in previous years. That is not permitted anymore per GASB, and the auditors flag that. So we gross up. We have to record the gross revenues on the left-hand side, on the revenue side, and then we manually record the fees that the vendor paid themselves as an expense.
okay.
So the
Okay.
bottom line is the same.
It's a net effect, yeah.
It's a net effect, but we're more accurately showing what the actual revenues are, and we are being much more transparent about the fees being paid to these third-party administrators. So that
Okay.
was a change both with the red light tickets as well as ambulance billing. So those revenues look higher compared to the prior years, but that's because we're comparing a gross to a net number.
Okay, thank you.
And then miscellaneous revenues, including non-recurring reimbursements, vary from year to year, and they finished within budgetary expectations. Our general fund actual expenses came in for a total of $74.7 million, which was $302,000 under budget. Central services, building and zoning were the departments which performed the best versus the original budget, with 6% and 8% favorable variances respectively. The police and fire departments finished within 1% of their original budget, and the only department which finished the fiscal year over its original budget allocation was Public Works, and this was due to higher than anticipated benefit costs and commodities such as fuel. The economic development category did exceed budget, as that new sales tax rebate agreement was approved during the fiscal year that was not originally anticipated when the budget was crafted a year earlier. Overall, total expenditures were under budget by $1 million, driven by holding vacancies until final cash out payments to retirees may be recouped, as well as monitoring spending within procurement rules and budgetary limitations. Are there any questions on the general fund before I move on? Business type activities. So now we're shifting over to our water, sewer, and our parking enterprise funds. And collectively, these are referred to as business type activities per GASB. The total business type activities, assets and deferred outflows increased $5.1 million to $115 million as of April 30th, 2020, driven almost entirely by the increase of capital assets, net of depreciation, linked to the capital improvements undertaken during the fiscal year, as well as the recognition of the water treatment plan asset retirement obligations, ARO, and deferred outflows. This is a new accounting pronouncement that there'll be a lot more information about in the more detailed report. Business type activities, total liabilities, and deferred outflow remain relatively unchanged compared to the prior year, and total business type activities net position grew by $3.6 million to $81.4 million for the fiscal year. So again, to compare to the private sector, that net position would be considered stockholders' equity on the private sector side. This positive increase to the net position reflects the fact that business type activities, as of April 30th, 2020, the liabilities are 29 cents for every dollar we have in assets. The city's business type activities revenues decreased by $400,000 to a total of $16.9 million for the fiscal year. This decrease is because of capital grants. Last year, we benefited from that one-time developer contribution from Bridge when we annexed properties in the city's southwestern commercial corridor. So when they made those improvements, infrastructure improvements, and they donated those assets to us, we recognized that donation as a revenue, and that was a one-time uptick in our revenues. Water and sewer expenses grew by 18% to $13 million due to costs associated with personnel, engineering, as well as depreciation. So the more capital assets we have, the more depreciation expense we're going to have as well. Expenses slightly decreased in the parking fund. And for these funds combined, for every dollar we had in revenue last fiscal year, we had 79 cents in expenses. So as you can see here, we have a net positive change in net position of $3 million. And that's all I'm going to cover tonight on those funds. Now these are all combined. So this is all of our funds combined, governmental activities, as well as our business enterprise activities. And you can see here for our capital assets, we increased from 166 million to 174 million. Land, and Alderman Taylor, to bring this back to your point, our overall land holdings actually did go down a little bit, from 9.9 million to 9.4 million. Land improvements increased slightly as we made some investments there. Our buildings went up, that's 40.9 million to 44.6 million. Most of that related to water treatment plant improvements. Machinery, equipment, and vehicles, we had some investments there as well. And then infrastructure also had quite a boost from roadway improvements. And these are shown net of accumulated depreciation. On the liability side, these are just our long-term liabilities. I did not include any of the current liabilities due within a year here. These are our outstanding bonds. And again, this includes water, sewer, parking, and GO. Our principal amount outstanding of GO bonds as of April 30th, 2020 is $76 million. That is an increase from the year before. Capital leases is 1.4 million, 1.5 million. We have capital leases for ambulances, snowplows, and 911 equipment. Our water sewer bonds, principal outstanding at the end of the fiscal year is 22 million. Our parking bonds are at 1.6 million. Special assessment bonds at 1.6. And we have the TIF note for bridge. This is principal only. As of April 30th, stays at 40 million, similar to last year. Our other long-term liabilities total $307 million. Our net pension obligation is the largest of that at $279 million. That's 90% of the total here. OPEB, which is retiree health insurance benefits, is at 13 million. Compensated absences, which accounts for, as of April 30th, all paid time off banks, vacation time, 50% of sick time, anything that under a collective bargaining agreement would be payable to the employee should they separate. As of April 30th, compensated absences was valued at 8 million. Our claims payables, which is work comp and liability claims, which we believe will not be settled within the 12-month period at April 30th, total 3 million. They're split there about 50-50 work comp liability. ARO, which is new this year, that's our asset retirement obligation. These are intakes at the water plant, which are retired but not yet removed. So we do have to record the long-term liability cost if a governmental agency or regulatory agency were to come in and say you must remove those. We're recognizing the cost of that potential liability. The environmental liability is Yeoman Creek. That's just under 2 million. And that brings us to our total of 307. So what's next? With Sickage LLP, as I said, there's just a little bit of a delay this year. I did talk to Alderman Florian earlier today. The federal government was great about getting the CARES money and getting these COVID-19 grants out and to the local governments, but they didn't come up with the rules for the auditors. So we got the money before the auditors knew how to treat them and do their audit field work. So we should have the public reports issued shortly. Again, I'm happy to share the draft reports to any of the aldermen that wish to receive that. But the CAFR should be issued shortly. Along with that will be the public management letter. The auditor communication to the city council and management is a non-public report, and that contains some audit findings. We'll be sharing that with you in an executive session. We also have TIF reports that include an auditor's opinion and the single audit, which is all of our federal money, CDBG, it will include CARES money, asset forfeiture funds. We will be applying for the GFOA Certificate of Achievement and Excellence in Financial Reporting again. If we are successful, that will be the 8th consecutive year that we receive that award. Some other reporting and filing requirements that we have that the auditors don't issue these reports, that the city does. You'll be seeing the appropriation transfer ordinance that trues up the actual numbers versus the originally adopted appropriation. We have the annual financial report and tax increment financing reports that the finance department files with the state comptroller. We also have a GATA, which is new last year, and this is a state budget office report that we report all of our state, local, and federal grant receipts, as well as motor fuel tax spending. The Federal Clearinghouse, which is part of the single audit process. Continuing disclosure, which is filings for our bondholders. The city's treasurer's report, which is published in the newspaper and filed with the county. And then finally, the Illinois Department of Insurance reports, and those are filed by the pension funds, and they have Waterback and Heyman handle that for them. So that's all I have on this for you this evening. If there's any questions, I'd be happy to answer those.
Okay. You're gonna go over the other reports as well?
Yep.
Okay.
Okay. And this is a report that the mayor's office asked the finance department to put together. And this is the COVID-19 fiscal impact management update. So in October 2020, the mayor and his team at that time started, and we continue to monitor revenues. We maintain flexibility in changing our assumptions based on new information as it becomes available. There really are not material changes since our May 2020 forecast. We do have the one-time inflow of CARES receipts to lessen the projected deficit for fiscal year 2021. We did receive about a little under $4 million in reimbursements through the CARES funds. The mayor executed a sweep of the general fund budgeted expenditures out of the departmental budgets to a set-aside emergency cost center. However, given the current spending patterns, we will need to further curtail spending to meet that reduced target. So we'll be taking a phased approach as the situation is monitored, and each phase will be triggered by the mayor based on forecasts, including measures of erosion in our revenues, and to avoid a negative cash flow if possible. So as a reminder, phase one, which began in May 2020, again, monitoring cash flow in our budgeted plan, that's ongoing. Executing a general fund budget sweep to offset projected revenue losses, that was done. Direct managers to cease all non-essential spending, that direction was issued via mayoral emergency order. Seeking federal and state aid, we did receive our total CARES reimbursement that the county was handling. We are currently working with FEMA for public assistance reimbursement. That is very specific and very limited and only 75 cents on the dollar. So for example, you can only be reimbursed for PPE for first responders, and that PPE has to have a burn rate of 60 days or less. You will not get reimbursed for stockpiling, and you will not get reimbursed for PPE for non-sworn personnel. So that's very limited, but we are pursuing that and working through that. We're also monitoring the HEROES Act, which is currently pending in Washington, D.C. Should that pass, we're not quite sure the venue for remitting those dollars to local governments, but we are closely watching that. Auditing tax revenues is something that we were doing pre-COVID with food and beverage and hotel tax, and we continue to work on those audits. And then restructuring debt obligations, and as the city council knows, we just successfully refinanced some water sewer bonds and are looking at some other ways that we can maybe lower interest rates on some of our outstanding debt obligations.
Question.
Yes.
I know, well, actually, I'll do two questions. When we hired the firm to go after like some of or we were going after these delinquent accounts when they were behind on their sales tax.
Right.
Have we actually caught up with them yet, or are they still delinquent? Or did
So,
things just kind of go off the rails?
so Avenue is the firm that we hired to do these food and beverage and hotel tax audits.
Okay.
It was an audit of all of the hotels and 50 of our food and beverage establishments. It was a 4-year audit through December 2019. We did pause that audit when we had the shutdown, when City Hall was closed down. We have restarted that process. So we're entering into our second quarter and we're continuing those audits. We will have the results once the audits are complete to bring back to City Council. I anticipate probably in the fall next year, because it takes about 90 days to do 25% of each of the audits. We could do a preliminary report if you'd like, an executive session of those that we've audited to date. We do have a few that have gone out of business. So, you know, the audits, once we get their declaration of, you know, whatever it is that they're closing, we might switch to another taxpayer or just move on to another one. But we did manage to get the first quarter done. We're now entering our second quarter. So we're behind in those.
Could we get those preliminary findings, even if it is an executive session?
Sure. Yeah, we can do that.
Okay, thank you.
So you said we stopped that in December of 2019 before the COVID, or?
No, what the City Council authorized was auditing 4 years of tax return records of these taxpayers. So it was a 4-year period through receipts up to
Okay.
December 31st, 2019. So that's still the period we're auditing. We're not auditing restaurants during the COVID-19, their sales during COVID-19.
Right.
These are audits of sales of tax receipts that were collected and should have been remitted to the city prior to COVID, so up through December 19.
So if they've now gone out of business, is there any chance we can go back and collect from them through, we really can't, right?
We can talk about that kind of detail in executive session if you want, but there are some avenues for that, but it might be a topic better to discuss in executive session.
Okay.
You said you had 2 questions?
Oh, the next one goes into phase 2 when we were getting to that slide. Why are we just now pooling department resources and reducing overtime? Wouldn't we have started that when we went into COVID to begin with, or were we doing that? And I'm not sure I understand that.
Okay. So sure, let me cover those as I work through this slide.
Okay.
So phase 2 will be phase 1 plus phase 2. We never stop doing the first things, right? We just add on to that. So the first thing that's going to be added is a multi-level approval for travel, training, and hiring. So all travel and training, and this would be effective November 1st. So all travel or training will be subject to the current travel policy, plus a justification of the event submitted via form that the HR department's currently working on. And only those situations which are deemed absolutely essential would be forwarded to HR for consideration. So we're still looking for the departments to kind of make those decisions as the department heads. HR would then review that, and HR would be another level of approval, and then it would go to the mayor. So there would be travel and training situations previously where the department head would have that authority. So this is adding another layer of review and approval on that. Current, we have vacant positions are subjected to our current payroll request form. And that's a process where we verify the funding. So we verify, does the position exist in the current appropriation? What is the budgeted position? There is a vacancy allowance calculation that we do that says terminating employee had a cash out of X amount of dollars. And in the audit presentation, we just covered the fact that there's all these compensated absence balances. And in order to recoup that cash out, how long does it take to hold the position vacant? The mayor can always override that. It's just a mathematical formula that we do. In addition to that funding component, there will now be a justification form that would be required by the departments to fill out. and that form will also go to HR along with the funding. So any vacancies which are not deemed immediately essential may be slated for a vacancy freeze for the remainder of the fiscal year. As
But
far
would
as,
we have done that as part of non-essential spending?
you know,
I
that's
mean-
part of the reason we're moving into phase 2. And I'm not sure if the mayor is on or not, but phase 1 was really leaving a lot of this decision-making at the department head level. And this is adding another layer of, so, you know, I can't think of a better term, but bureaucracy on top of that. So this is really moving some of that decision-making to be done with the department head in conjunction with HR and the mayor's office. Pulling department resources. The city has not had a centralized purchasing function in more than 20 years. So to your question about department resources, that's always been encouraged. We have joint purchasing options available, but departments are decentralized from a purchasing standpoint. So if they did need to procure something, department heads had up to $24,999.94 of authority to do that. They do have to go out to bid, but again, that is something that's decentralized and determined at the department level. So this again is adding an additional layer. So prior to any commodities being ordered or purchased, departments will now need to contact the finance department, and then we will assist and see if anybody has some resources that can be shared or redistributed, regardless of the initial department that purchased it. Any non-essential purchasing should cease for the remainder of the fiscal year. And before any new vendor or contractual relationship can be established, again, departments will need to contact the finance department and will assist to identify if there's any joint purchasing options. We'll be asking at that time if this is essential. If the finance department doesn't feel that it makes the cut for being something essential, the department head does have the right to then take that to the mayor for reconsideration. So this is kind of a hybrid of centralizing, but centralizing some of the review, but still leaving department heads with the ability to make these decisions, you know, before they even get to finance or HR. Reducing overtime spending, you know, this is something that's done on the operational level. A lot of times it's done at the shift. There are shift minimums in these collective bargaining agreements. So in order to institute the multi-level approval process for that, the departments will still be determining their own overtime needs. However, they will need to be submitting documentation justifying that overtime. We'll be looking for that the department head or his or her immediate subordinate, so deputy chief level, for example, if the chief's not available, is approving that overtime before it is worked, not after the fact. And those reports will need to be submitted with the timesheets bi-weekly, and they will be given to the mayor's office for review. So that is our phase 2 approach for now. Any other questions? And then should we need to enter into phase 3, this would be something that would be deemed by the mayor, whether or not this would be entered into. And this would be a restructuring of the organization. So we would, again, have phase 1 and phase 2 still in play. We would then examine fees for services and new taxes for desired services. Closing certain facilities and ceasing certain services would also be evaluated. All purchasing functions would be completely centralized at this point. There would be a hard hiring freeze instituted at this point as well. And then the city could consider offering a voluntary separation plan or an early retirement initiative. The bargaining team, which would be HR and legal, would then approach our unions about across the board wage freezes, compensation deferrals, and reductions in employer paid benefits.
Tina, I have a couple questions.
Sure.
So going back to phase 1, I think it was, where you mentioned the CARES money, is that just going right into the general budget, or does each department get that money based on what they've used as far as equipment or PPE or whatever?
Well, each department is in the general fund. So it is one general fund budget, and the grant is recorded as a revenue.
Right, but then as far as the city's concerned, I guess is what I'm
Right.
saying, like, so are you, how are you gonna manage? Like, I'm sure the fire department and the police department use way more PPE than other departments.
Right.
So will they get some of that money back in their own personal budget then, or how is that gonna work?
Well, the police and fire departments already account for the vast majority of the general fund resources. But in governmental, and I could go back to our general fund slide and show you the comparison. Unlike the private sector where there's profit centers, where Unit A generates revenues, and then that's matched against Unit A's expenses for the net profit or loss of Unit A. Police and fire do not generate sufficient revenues to be profit centers regardless. They are almost entirely tax supported. Ambulance revenues are, I don't know, $1 to $2 million a year, and the fire department budget's 20 million. And that's just an example. So we record the revenues on the left-hand side. It's a revenue. That's a big old bucket for the general fund. And the police department, the fire department, public works, finance departments are expenses. So I'm not quite sure how to answer that question. When we are receiving these reimbursements back, we don't then give the check to just the fire department or the police department. It comes back to the city's general purse, which will still be in a deficit position.
Yeah, and let me help out. Let me help out with that. Alderman Florian, we recorded all of was our eligible expenses with a formula that was put together by the county through the CARES Act. And that was sent over to them. And then they said, hey, this is what's eligible from a dollar wise. So we're just recouping our expenses. So that goes to our general fund to try to offset what we were not able to get from the various revenue streams that we have. So, they had their budgets for the year. They were able to, they're now continuing to manage through those. Luckily for us, through the CARES Act, that was sent through the county, then we applied for that grant. We were kind of offsetting some of those expenses, but to your immediate question, it's not going to be broken down and given to the various departments. This goes right into hopefully to offset some of those expenses that we would have never been able to get reimbursed for. So that's, and hopefully in the next stimulus that's being talked about right now in Congress, we'll be able to get some of those funds. And our hope is they will be directly to cities versus a pass-through from whether it be county government or state government. That's the hope. I hope that answers your question.
I have one more question. You mentioned overtime. I don't remember which phase it was now, and I don't have it in front of me, but in phase 2, maybe you were saying overtime had to be approved and through this multi-level thing or whatever. Isn't overtime already approved in some way, or are departments just allowed to do overtime at their own discretion?
Well, departments do have their own approval processes in place, and that is a decentralized process. So each department has its own overtime approval protocol in place. Much of the overtime is dictated by shift minimums, manning minimums, which is in the collective bargaining agreements anyway. But there is an approval process, and sometimes those approvals can be done at the shift level of a commanding officer on the shift if they need that. What we're saying is we need to see documentation that in addition to that kind of CO role at the shift level, that the department head or his or her designee is being involved in that frontline decision before it's being worked. And then that documentation needs to be submitted.
I think Alderman Rivera.
Have a question?
Yeah. Okay. So the CARES money is offsetting the COVID-19 expenses for, okay. And there's obviously it's not going to offset them all.
Right.
Do we know, how much in the hole we are?
So, in May, we had projections of a 10% revenue loss. So if we had kept, we adopted a balanced budget, but then we said, okay, we're going to lose about 10% of our revenue. So that would be a $7 million deficit. So with that $4 million we got from CARES, ballpark, and again, this is just an estimate, things can change significantly, okay? But, we're looking at a $3 to $4 million deficit if revenues don't rebound rapidly, and if we spend what was originally budgeted. So what we're trying to do with this phase 2, there's not much we can do on the revenue side. CARES is what it is. We received what we're going to get with CARES. The FEMA public assistance is very, very limited. And HEROES may or may not pass. So what we're trying to do with phase 2 now is bring that spending down. So if we had a $7 million revenue loss and we made up for some of that with CARES, now we need to press in on these expenses as well to try to get us to finish as close to the black as we can instead of in the red. So I can give you that number tonight as a maybe, but what we're hoping is that by putting some of these measures in place, that we don't spend that original budgeted that expense side. That's very hard to do when you don't have vacancies. That's very hard to do when you have minimum manning and collective bargaining agreements that drive your overtime. So it's going to be a very difficult task for our department heads that are being asked to provide a very high and important level of service, which they do every day. So this is going to be a very difficult task for our frontline supervisors, our employees. It's a difficult situation for everyone to be in.
Thank you, Tina.
All right, and we are still in the Finance Committee. Are we gonna go through the other reports you have, Ms. Tina, or?
I'm happy to submit them as presented unless any aldermen have any specific questions about any of the reports.
I think everyone has the reports, and for the interest of time, I think we can probably peruse them ourselves and then get back with you if we have any questions. Any of the committee have any questions? Finance Committee members? Okay. That being said, I'm going to entertain a motion to adjourn. I'll take a motion by Alderman Moiseo, second by Alderman Seeger to adjourn at 8:05 p.m. And I will take a roll call, please.
Alderman Moiseo,
Aye.
Alderman Kirkwood,
Aye.
Alderman Rivera,
Aye.
Alderman Seeger,
Aye.
Alderman Newsome.
Aye.
Thank you.
Ma'am, 2 minutes. We start in 2 minutes, ma'am.
All right.
Oh, give me 5.
Get 5.